What's up, good people? Welcome back to Stock Up with Larry Jones. The European market has sold off. The credit squeeze, the European banks are in turmoil. It has tanked the European market. Again, banking here in the U.S. is tanking. The entire stock market is tanking. We had PPI come out this morning, and we have all of these things going on. Our markets are selling off. The Dow is on track for the sixth day of negativity or negative close, if it closes negative today, out of the last 7 trading days. We have all of this going on. For those of you that don't know, that are new to the page, my name is Larry Jones, and this is Stock Up with Larry Jones. We are a family, okay? Make sure you don't fall for any spam in the comment section. I don't have a WhatsApp or Telegram. Lastly, this episode, of course, is brought to you by Stock Up University. Stock Up U. It will be the top link below. Listen, let's get right into it. Let's just look at some things. I got some things I want to show you here first. Look at this. European shares closed down 3% as credit squeeze lends bank stocks on a wild ride lower. Leads bank stocks on a wild ride lower. It should say on a worldwide wild ride lower, right? Because that's what's happening, because the banking system worldwide is a house of cards. Somebody said this morning on my live, we don't care about Europe. Yes, you do. We don't care about China. Yes, you do. It is a world market. I keep saying that, and people just don't understand that if America sneezes, the rest of the world catches a cold, right? And vice versa when it comes to some of these bigger countries, okay? So let's look at this. Let's look at what's happening with crypto for one quick second. As you can see, some of the popular cryptocurrencies are down by double digits at the time of shooting this. Solana down 12.5%. Polygon almost 11%. Cardano 10.37. Bitcoin is holding pretty strong. One other thing I want to show you while I have my phone up. Goldman Sachs came out with this also just a few minutes ago. We have lowered our 2023 Q4 GDP, gross domestic product, growth forecast by 0.3, okay, to 1.2, which means that their earlier forecast was 1.5, now it's 1.2, to incorporate these estimates of tighter lending standards, reflecting in part a larger downgrade to investment spending. Okay, and so they've downgraded our GDP, but oddly enough, they've upgraded China's GDP. Take a look at this. Goldman Sachs raises 2023 China GDP forecast. Look at that. So it is, it's all over the place. All right. So now let's look at some of the banks here. JP Morgan. I'm sorry. Let's look at, JP Morgan. Let's look at that. We got JP Morgan, Bank of America, Citibank, Citigroup. They're all down bigly. That's my word, bigly. They're down. Look at that. That is not good. JP Morgan down by 5%. Citibank almost 6% down. Bank of America 2%. And this is not good. This is in pretty much the entire country with banking, especially regional banks. And now Europe is having the same problem, right? Let's look at the major indices at the time of filming this. As you can see, the Dow is down, right? Let's just put it up here where we could see it really good, right? And as we could see here, the Dow is down almost 600 points. It was well over 600 points, almost 2%. This will be the 6th down day in the last 7 trading days for the Dow. We're on track for it. And then the S&P is down, as you can see, 1.5%, and the NASDAQ. What else do we have here while we're here? I was just taking a look at Tesla. Tesla's tanking too. This is what I mean by, when stuff shoots up and the PE, you're going to notice that this PE is going to start to fall in an environment like this. Keep your eye on Tesla's PE over the next few days. And as you can see, it's been trending down, fighting back, but trending down. All right. What does all of this mean, Larry? Well, I will tell you that, yes, there's a lot going on, and I have more bad news to read you here. There's a lot going on. Now, if this banking situation had not happened, today would be a green day because of the PPI numbers. The PPI numbers came out and they were pretty good. It's showing that inflation is going actually down, right? And PPI was 0.1 versus 0.3 this morning. That was the lowest since March of 21. Even PPI less food and energy. I don't know why they do that. I do know, but I don't think it's right. PPI, produces price index. Remember, things are produced first, produces price index, before they're consumed first, consumer price index. Okay. And so the PPI less food and energy was expected to be 0.4. It came in at 0.0. So transportation and warehousing, which are some of the biggest cost of producers, are cooling off. So these things are cooling off, and it was supposed to be a green day, but we're having a red day. So now, is this the beginning of the end? Is this the drop that you've been talking about for the last 14 months now, Larry? Is this the major leg down? It very well could be, and it could be caused by the banking. Now, what exposed the weak banking system even more? The Fed rate hikes. That's what it did. And that's what he was doing. He was trying to keep his foot on the pedal until something breaks. He knew something was going to break. And so here we are. And it has a ripple effect throughout not just the country, but the world. Not just the banking system, but everything. You don't believe me? Look at your portfolio. Look at a heat map and see how much red it is. Now, Friday will be a very important day, good people, because remember, this stuff has to be digested. You have all of these governments that are scrambling to save these banks. They're trying to save credit squeeze. We've got to see what's going on with it. And just like we had Silicon Valley Bank here, SVB here, and now we have our major banks taking it. And you say, hey, it doesn't matter. That's a regional bank. Oh, yes, it does. Because of what happened to a regional bank, let's look at what's happening to our major national banks. They are tanking. Now, unfortunately, there's a lot of plays that we are in. Let's look at that. There's a lot of plays that we're in, including myself, that we're stuck in, right? I had some energy plays. And the ones the contracts that I had that were in March, I sold them. For a loss. The ones that I have further out, I'm keeping because everything is tanking. Now, I've actually bought some banks on yesterday. It was a very extremely risky move, but I was willing to take it. And today it's red. All right. It's the banking plays that I did was red. Remember, I cautioned you guys to the moon, but mine are in options and they're further out. So I have time for them to recover. Either I'm going to lose or I'm going to win. But here's the thing that I'm going to tell you guys if you're playing options. If you play a play like I have, GEHC, you guys know I've played that option probably 15 different times. And 14 different times I've won. But right now I'm losing. So you go, well, that's not good. It is good because I've had that money. And here's one of the things I'm going to tell you guys about options or just in general, but it was especially with options. The way to safeguard yourself is to go in with the same money. So if I would have went in, let's say I went in 9, I'm going to use 10. Let's say I did the same play 9 different times. But on the 10th time, I invested all of the money put together out of the other last 10 times, then I'm blowing my account up. That's not the way you do it. if you all 10 times invest the same amount of money, then you can't lose. 1 out of 10 ain't bad. So just think about that as far as your disciplines go. We're at 10 minutes. I want to read a few more things here. And yep, the banking system has collapsed. There's a flight to safety right now. That's why Bitcoin is holding strong right now. People are searching where to put their money. Even the bond yields are gone. We're still the macro environment. We still have an inverted yield curve. We still have higher interest rates. We're going to talk about what the Fed may do in a minute. Okay. And on yesterday, Bitcoin hit a 25% high in the last week. So Bitcoin has went up 25% within the last week as of yesterday, cooling off a little bit today, right? Higher interest rates, inverted yield curve, and a stronger dollar and a weakening economy are still just hovering over us, even on days like today. And it could get worse, right? The Dow on track for the 6th negative day out of last 7, right? We went over PPI. Yep, we went over that. We went over the banks. That's happening. And you guys know I said it on yesterday that I got into a play, and that play was a bank that was going down. And but I went out far on it. Today I'm taking a bath on this play, but I'm just going to keep it to you guys real. All right. FRC is the bank that I'm in. I brought it up to you guys yesterday. Let's see if we can pull it up. Let's see if we can add that to that. Okay. First Republican, right? As you can see, First Republic, I'm taking a bath in. It's down 19% today. So I'm taking a bath on that. But if it turns around, then I stand on making a lot of money. Now, I did not put in everything that I was going to put in. So I only bought a few contracts, and then I bought more today as it went down. That's the way I do my momentum option trading. Okay. And so now I didn't buy it at the top and then it falls down and I'm down that much. That's the way I do momentum trading. But I have these options out months. So it gives me time to recover and it gives me time to dollar cost average. Even in my dollar cost averaging, I have a cutoff amount that I don't care how much it falls. I'm not putting that amount of money in because I have all of my earlier wins. That's how I protect myself. Let's go to what the Fed may do. We know on the 21st and the 22nd, we're having the FOMC meeting where the Fed will be doing his rate hikes. Okay. And he will be doing that on the 21st, and on the 22nd, he stands and takes all of these dumb questions from these guys that are trying to have gotcha moments, and they are literally trying to cause the market to go down even further. I hate when the Fed speaks the second day. But now let's talk about the interest rate hikes. There is no way, I can't say there's no way. I doubt very seriously if he's going to be going up 50 basis points. Remember, his job was to keep his foot to the metal or pedal to the metal until something breaks. Well, something broke, right? So now I think at best he may go up 25 basis points and then neutral from there. Or he could just say, we're going neutral right now. If he says we're going neutral right now, that would be easy for the stock market. Now, I got to give you guys the worst case scenario. The worst case scenario, he says, we think inflation might still come back. Then we're going to go up 50 basis points. Now, we will instantly be in a deep recession. I'm just telling you guys that right now with everything that's going on. The stock market will fall like a brick. So now I'm suggesting limit how much money, limit your exposure. Now is I will tell you, do your due diligence. And this is a stock picker's game or a long game. And don't be aggressive. Don't be a cowboy with your options right now. Okay. I'm just stressing caution, caution, caution. But for those of us that's been cashed up and waiting, it's almost there. It's almost there, and we will know. So let's keep our eye on Friday. If there's a sell-off during closing bell, then that's a bad sign for the following week. That's what I think. You guys leave me a comment if anything I said has shined any light. Leave me a comment on what you think or where you think we are right now. Is this the big one? Remember, honey, this is the big one. Is this it? Or this is just something by the banking, these governments, which could happen, will step in, save the banking, and then the market will look back and say, hey, the PPI numbers wasn't that bad. Then the market could be green. Or is this just the free fall? Because I will tell you that this banking situation will be long and it is not over. All right. All right. I'm going to leave it right there, good people. Make sure you check all the links out below. Today is actually Weeble Wednesday, I believe. And so it will be the second link in this video. The first link will be the class, which if there's things you don't know about, you don't know anything about options, you need to take the class, right? You don't know how to read charts, you need to take the class, right? All right. So I'm going to leave it right there, good people. Leave me a comment and we will see you tomorrow. Live, love, laugh, learn. And remember this, the more you learn, the more you earn.